Let's bring in Nick Kunze to talk more about those movements that we saw today. Very good evening to you, Nick. An interesting move in the United States today in terms of data that came out. CNBC said that inflation came in hot as it was more than expected at 0.3% higher for the reporting period. And I suppose that had something to do with how we ended off the local market today, over 1% in the red.
Yeah, good evening. Yeah, it was a big data point for us today, that US CPI number, but a little bit I guess, a bit skewed by the energy prices, which were a core component, which led that CPI number hotter, as most people have been reporting. If you actually look a little bit, drill down to the numbers, besides, if you strip out that energy, it actually wasn't as bad as expected. So inflation is coming down. But maybe not as quick as the Federal Reserve really wants it to be.
Let's talk about company updates now. We start with Prosus. That share price falling dramatically today, Nick. What would you say were some of the biggest concerns for market participants around the share?
Well, Prosus giving a lot of clients heart attacks when they looked at their screens this morning. But there is actually a share consolidation there. It was flagged a few months ago. Most people didn't maybe put the date in their diaries before they looked at their screens today. But 55% down on the Prosus share. But rest assured, Monday morning when the JSE opens, that share price will be squared up again. So you're missing 55%. Will actually be back on your account on Monday, so don't panic. So a little bit skewed. But the rest of the JSE, lots of stocks going ex-dividend today as well. A couple of earnings taking place too, so also weighing on the overall appearance of the JSE, which finished over 1% in the red.
Another company move that we saw today was the real estate company Growthpoint, reporting annual growth for the period, but it is wary of the economic outlook of South Africa and, of course, the global uncertainty that persists at the moment.
Yeah, difficult to get excited about the retail sector. I mean, that is obviously South Africa's biggest property company, and they've obviously got the jewel in the crown being the V&A in Cape Town, which performed reasonably well. I thought the numbers were okay; they were all right. Their loan to value, which is quite a good indication of a health of a company, ticked up, a couple of basis points. That is good. So overall, okay, but. Of course, it's often in the detail, and if you looked at the end of their statement, their outlook for the sort of local economy and their sort of the retail sector, they say is certainly looking weaker. And I guess that'd sum it up globally as well. So yes, good numbers, but once again, I think the outlook with our consumer looking a little bit less positive going forward.
I mean, Growthpoint do, Nick, also have office property as well. And I wonder if that outlook will also be impacted by the way of work now, these hybrid models that are being introduced by various organizations. And so the need for rentals and the like might also be on the decline, if not in the medium term, perhaps in the longer term.
Yeah, that's a good point. And you might have seen, certainly around the Sandton area, a lot of these offices now being sort of partly converted to smaller apartments, though a lot easier said than done. If you listen to the real estate companies, it's not that simple. A lot of these office buildings with false ceilings, false floorings, which are used for the fiber optic cablings in offices, they're not that easily transferable into residential. But yeah, definitely new ways to work. We're encountering it at Sanlam as well. Not necessarily having to be in 5 days a week, so definitely gonna have an effect as well. Also, once again, as I said, weighing overall on the sentiment of the property sector.
And here's an interesting company, Nick, Transaction Capital. So the CEO quitting yesterday. Many analysts saying that he was actually forced to step down. And the big pain point here has been SA Taxi and the inability for that recovery since the pandemic, because the taxi industry suffered as badly as it did. And of course, it did say in a statement yesterday that it did miscalculate the prices of second-hand taxis when issuing those facilities to consumers or customers. But today says that it hopes to secure some funding. I don't know. Do you think that there are any investors or potential investors out there that have an appetite for this business that's very unstable at the moment?
It's a tricky one. I mean, I guess the annoying aspect, I think, is a lack of more detail. You touched on pretty much everything the company said in 30 seconds. I mean, there wasn't too much detail. There wasn't enough detail to make more of a sort of I guess, an educated decision if you want to invest in the company. Look, we all know, look, it's not just about the SA taxi business, which is under pressure. We buy cars, which they probably paid too much for a few years ago. That is under pressure. And of course, things are returning to normal. A few years ago, with lockdowns and inability to get chips for cars, people were paying more for second-hand vehicles than they were for new cars. Of course, that is now reverting back to normal. It's never going to last. So a lot of headwinds, the South African consumer, load shedding, you name it, they've all got it. Share price knocked another 15% again today. I would hesitate to say, though, it seems to be like they are trying to stabilize things. One of the founding members now stepping in, John Jarvis coming back, and Standard Bank also forced to make a statement as well, saying that they were behind it as well. So let's see. We'll let the dust settle a little bit on this one.
Let's see what happens when the dust does indeed settle. Nick, as always, thank you very much for joining us this evening. That is Nick Kunze from Sanlam Private Wealth.